right, it's Sunday, March 15th. We're going to take a look at actually, we'll start off with a weekly. And we should probably spend more time looking at the weeklies. So let's go ahead and start off here with this is the Euro Dollar weekly. So last week printed a pretty decent bearish reversal candle here on the weekly time frame Euro Dollar. So you can see this resistance point here at 1.1468. It's an approximation. It's hit here several times. So again, if you're following along with my trading system, you know that most of the time I would prefer to trade off of horizontal support and resistance levels. They're much more reliable than just trend lines. I am not saying that trend lines don't work. I do use them, but I don't use them near as much as I do looking for specific resistance, buy sell zones, things like that. A lot of people refer to them in different manners, but they're pretty much doing, for the most part, the same thing. Again, let's see, this goes back to March. There's a low here, March 2015, April, and then we've got June, we've got October. So we've got all through the summer months as well of 2015, and then again back up here at 2016, and then it starts to create some difficulty here on the way back down, retesting that level of resistance back in 2018, and then here we are, one more last retest, 2020, and now we've got that bearish reversal signal candle. And looking at the way things appear here on the weekly time frame, we can all pretty much draw the same conclusion. Obviously, some people would probably see maybe some kind of a bounce. But again, we need to pay attention to these levels because we could be at a pretty critical level of resistance that could drive price a lot lower. So I would expect more of the same. Again, just as always, when we see, even if we're in a downtrend, we still expect and we still look for the possibility of some of these bullish retracement days. And those bullish retracement days could stop us out if we're not using the right stop loss or if we get in at the wrong location. So you got to be careful, but be aware of this, and also be aware of the weekly low on the Euro Dollar. That might give a signal and an opportunity. I do that on a pretty regular basis, sometimes even on a 30-minute or 1-hour chart. If I'm trading, let's say during the New York session, often, if I've got a daily candle and a signal on the daily chart from the day before, price takes out the low of the previous day's low on the daily time frame, and it happens during, let's say, the New York session, I might get an opportunity to trade that. So again, I would trade to psychological levels in there, but this could lead to a much more lower or deeper correction eventually. But this is, you can see this was the initial retest of that level of resistance, and it could accelerate from this point. And you can see another thing to be aware of, the size of these candles. So notice the size of these weekly candles here, and then notice just how much movement we've had over the last 3 weeks. These candles are starting to really stretch out. They're starting to get a lot bigger. So this is the weekly Euro Dollar. This is the weekly Pound Dollar. Once again, another level of resistance retested. This one wasn't as sharp. There is another range of resistance in here. But again, this is here on the Pound Dollar, this completely engulfed the previous week. So again, expect some kind of a pullback, some kind of a bullish pullback at one point in time, but I would expect another retest of these lows here. This goes all the way back to, let's try to get this date here. This is the October low of 2016. So this, this could go on. We're getting pretty close to a pocket or an area of support, but it doesn't necessarily mean that it's going to stop there either. Let's tighten up the charts and see if we've got anything over here to the left. I tighten up the charts, and we're going all the way back to 2007 here with the data that I can squeeze into this chart. I can go to a monthly chart, of course, but we're just looking at the weekly right now just to try to gauge what's likely to happen over the next few days. So let's take a look at the daily time frames. Before we move on, though, let's look at the dollar-yen weekly chart. Dollar-yen. This is a pretty interesting setup. And again, this pocket or this range over here goes all the way back to 2013, 2014. It's a pretty significant level of support. Again, it has some kind of an impact right through 2016. And then And then here we just retested and bounced off of that last week. So at this point, we're looking at a pretty significant level of support, and I would expect more of the same. Notice the difference though in this candle. Not only did it retest and bounce off of that support last week, but it also engulfed. So it's not like a reversal where it's closing, 60, 70% of the length of the opposing candle. Here we've got one that's completely engulfed the previous candle. So I would again expect more dollar yen to the upside, which would indicate Japanese yen weakness. Watch those futures. Remember, we always watch these Japanese yen futures charts whenever we're trading and looking for confirmation. I do. And but again, with the timing, be careful, because if the timing's off, we could end up, trying to go long at the wrong time using a relatively small stop compared to what we see here on the weekly chart, and we could have, some kind of a bearish retracement day for the week. I'm sorry, not day for the week, but a bearish retracement week. We're looking at the weekly chart here, and then it could resume maybe the week after. I don't really think that's going to happen just yet, but we'll know and we'll have confirmation when price takes out the high of last week. And then, it might resume, and we can watch Japanese yen futures, look at the volume levels that are coming back in at that point in time. So as I mentioned, we're going to look at the daily. Nothing really here to indicate that this is likely to stop. This is the euro dollar daily time frame, and I would expect more of the same. We do have a little tweezer bottom here, so that could sort of indicate that there might be some kind of a bullish retracement day. Again, this is the daily time frame, not the weekly now. This is euro dollar, so we could experience some kind of a pullback. One of the things, though, that I will definitely be doing is putting a Fibonacci tool in here. And when I get a solidified confirmed low here, after, let's say Monday or Tuesday, if it holds, then I would want to notice and pay attention to the depth of the retracement to see if it's controlled and contained and, structured based on the Fibonacci retracement levels. And then if and when it does resume to the downside, it's going to make these extension targets much more reliable and much more I'm going to be a lot more confident in trading them when I can gauge the structure of these retracements back up to these Fibonacci retracement levels. Let's go to the pound dollar daily time frame. Pound dollar, again, sitting here right around this pocket of support. It's getting pretty close. It looks like at the open it might move down a little bit lower, and then maybe at one point in time during Monday or Tuesday we could see some kind of a bounce and retracement day. I wouldn't bet off of that just yet. I don't have signals to trade what I just described, but I would be looking for that as a possibility. Again, I don't want to fight the trend just because we've had 1, 2, 3, 4 days, 5 if you include that small body candle at the very top. 5 bearish days in a row. That doesn't necessarily mean that we have to see some kind of a bounce and that we should trade it and wait for it. You don't want to fight the trend. But right now, the way it's stalled and the way it stopped here, it looks like it could potentially print some kind of a retracement. So be careful. Again, the timing has to be right if you're going to sell it here. If it doesn't take out the lows at the open within the first few hours, and let's say during the London session it prints some kind of a retracement, that's what I would expect for the most part on Monday. And then on Tuesday, if it comes back down and takes out Friday's lows, then maybe we would see some more to the downside in this trend resume. And let's go over here to the dollar yen daily. Dollar yen daily time frame. Again, where it stopped on Friday, it's in this range and this pocket of resistance. That doesn't necessarily guarantee that it's, that we have to see some kind of bearish retracement day, but it could lead to that. So just be aware of that possibility. And otherwise, again, if it takes out the highs, it might be an opportunity for us to trade this. I don't see any reason why it would stop just right now, other than just this technical level here, and then whatever happens at the open and how the market reacts to all of this news and the closures and the expected economic impact that all of this is going to have in the future, the near future, what the next 6 months is going to look like. So we'll know how the market really is going to react once we see price moving. But just be aware of these possibilities. There is the possibility that we could see some kind of retracement day. Going to the 1 hour charts, let's look for the breakouts here. 1 hour time frames. Again, I mentioned that even if I trade off of the daily time frame, sometimes, especially with the trade copier, I'm going to be using psychological levels. So here on the euro dollar, this is the 1 hour chart. So we need to make some adjustments. This dotted line here this indicates the end of last week, the start of the new week. So at this point, I'm going to make an adjustment here to the support. This is last week's low. That's a pretty critical level. Price is sitting pretty close there. It may bounce. I'm looking for consolidation that would be at least 60 pips, preferably 65 pips from the low to the high. So with last week's low, if price moves up here at the open and then it stalls and I get 2 candles to the left, 2 candles to the right, and it solidifies some kind of a resistance point, at that point, which I don't have it just yet, but at that point I would then measure the distance. So we've got a low there at 1.1054, and I would be looking for at least 65 pips from the high to then identify a possible resistance point, maybe some kind of a continuation breakout trade if it breaks out and starts to move back up to the highs and retests some of those Fibonacci retracement levels that I showed you on the daily time frame. That's a possibility, but I'm looking really far down the road there, and I really don't know. At the same time, this could go nowhere, not really move too much higher, and then close right below that support and then just keep moving lower. That's also a possibility. And if it does that, well, then it would be some kind of a continuation breakout trade to the downside, and I would want to confirm on a 1 hour chart, Bollinger Band separation, no divergence in the CCI or the MACD, and then I would look for an opportunity. Now, this has already been a move to the downside, so when we see multiple continuation breakout trades in the same direction, sometimes some of these indicators are going to be a little off, and sometimes the Bollinger Bands will create more of a channel rather than that expansion move that we need on the initial continuation breakout trade. So at that point, I would also need to be paying attention to the 4 hour chart. Now, I'm going to be posting some of these updates in the Slack channel for coaching, and I'll let you know when I see one, but it could also be that I end up needing to rely more on a 4 hour chart, because it happens when the trend's already in progress and in play. I need to go to that 4 hour chart. Usually it'll clean up a lot of that data and it'll give me a solid confirmation signal candle with these indicators that I also need confirmation with. But it'll look pretty obvious that at that point the downtrend is going to resume and continue to the downside if that's what it sets up. I'm not really too sure. I'm just going to have to wait for the initial open. Pound dollar, this is the pound dollar 1 hour chart. I'm going to make an adjustment here to that support to incorporate last week's low, which is right there at the close, at least according to this chart. Your chart might look a little bit different depending on your broker server time. This high right here, this price swing high all the way up there, that's, we're looking at 2250 or 2260 and 2620. That's a huge range. If price holds here at support and then pulls back up and then moves sideways for about 7-8 hours, remember that's the consolidation range. That's the amount of time that I need to see to solidify some kind of a consolidation for the continuation breakout trade on the 1 hour chart. On a 1 hour chart. Remember, not the continuation breakout trade on the 4 hour or the daily, but on the 1 hour chart. If I'm going to try and trade it for 55 pips, especially if it's going to reverse and go back up, there needs to be at least 7-8 hours of 7-8 candles there, solidifying that resistance, that consolidation range, and then maybe I can get an opportunity to trade it. But again, the range from the high to the low of that consolidation needs to be at least 65 pips. And I most likely don't need to wait for price to take out the high right up here, this price swing high from last week. That's really far off. I would probably get some kind of a Tech 1 trade, or possibly at the London Open, I could trade the London 30-minute breakout trade, and that might give me an opportunity if it starts to move back up. And so what I'm getting at here is I might not get any signals right at the open. It may take until the London session before I start actively trading either the euro dollar or the pound dollar. And then the dollar yen, I'm not really too sure how I'm going to trade that one. It really depends on how it reacts over the, at the open. There could be some reaction. A lot of people are expecting that the yen's going to be a little more sensitive to what's going on here, and there may be some opportunity there. I really can't say. So let's go to the dollar yen. So right now we're going to use this resistance point goes, let me tighten the charts up here. This resistance right here that we see at 108.57, this also goes back 2 weeks ago. You can see it here 1, 2, 3, maybe 4 times. Tweezer top right there on the 1 hour chart. So it's a pretty it's a pretty decent level of resistance. I mean, I've got to respect that level and see what's going to happen here. At the close on Friday, I was watching this one to see if it was going to print some kind of a reversal, not necessarily giving me the opportunity to trade it on Friday, but maybe if it holds, it might at the open give me an opportunity to trade it. If this thing gaps down quite a bit and it just keeps going lower and lower, then it's already taken away my opportunity to get into the trade, and I might have to skip on it because then the stop would have to be pretty large, and I'm looking to minimize my stop loss situations here in this type of market. I'm trading much more defensive and cautiously here in this market. The retracements on a 30-minute candle can be a lot more substantial and a lot deeper than the stop loss I'd prefer to use. You know, I was looking at it on Friday and I watched a few trades that I would normally consider trading, and they were moving, 25 and 32 and 35 pips in just a few minutes on some of these currency pairs, and that's a deeper retracement than I'm sorry, stop loss or movement than the stop loss I would consider using on a 30-minute or 1 hour chart. Usually on some of these reversals, I'm going to be trying to use a 25 to 35 pip stop loss, and if it looks like it's going to exceed that, I've just got to stop. I got to stay out of the way and leave it alone. And I can't keep testing it if I know it's going to continue to do that. I just need to wait for a better opportunity when things return to a more normal trading range, and I can start gauging and timing these 30-minute candles and 1 hour chart candles, noticing that the ranges are getting a little more smaller. That would obviously provide a much better opportunity for me to minimize the stop loss and use a smaller stop and have it hold me in the trade. And that's what I'm looking for. We can look for trades and try to use really small 15 pip stop losses, and you might be right on the direction, but it's the retracement that might stop you out over and over and over again, and you're just going to get frustrated trying to use a small stop in a market where it's really volatile and the movement's much more deeper than you're used to. And this is all happening for a specific reason. It'll return to normal. I just have to wait for it, and I'll clearly see the signs as I continue to measure and monitor the distance of these 30-minute and 1 hour candles. So again, I don't know. This looks like some kind of a retracement, and this is at that 2-week resistance level on the dollar yen. So it might pull back down at the open. But again, if it gaps down and it's really big, I'm not going to get into a trade like this over the weekend and hold it, even though I have a signal. I'd love to trade it, but the gap if I was wrong on the opposite direction could be pretty substantial. I get stopped out right away. So I've got to wait for confirmation. If it holds here and then it gaps down and then keeps moving and bounces around, retests and comes back down, and that's the high for the week or something to that effect, then I'm going to get another opportunity to sell it if it's going to keep moving lower for the week. I just have to wait. But again, I just want to let you know that if you see a gap here on the open, there's nothing I can do about it. I can't just short it immediately and stick my stop loss right above Friday's high. That's going to exaggerate the stop loss, the size of the stop loss, and I've got to use controlled, contained stop loss placement, especially again in this trading environment. So we'll see what it looks like. I mean, I don't know if I'm going to get any trades during the Asian session, but I'm definitely going to be watching the London session. As I described this one here, pound dollar. If it holds here at support, I'm really not too sure how it's going to react, but if it does, I would be looking for some kind of an opportunity if it looks like a solid bounce, and then maybe there would be more follow through during the London Open on that 30-minute breakout candle that's set up. So we'll just have to wait and see. It's play it by ear in a situation like this. We can see, again, looking at the larger time frames like the daily and the weekly, where things are likely to head next. But the timing, it's all about the timing, because we've seen some strong big moves, and the retracements can be really substantial and stop us out quickly, like within minutes. So I got to have my timing down just right. So I'll send out another update Monday evening after the close, and then we'll take a look at what the next play would be for Tuesday.